Hey, this is Reginald Perryman with RegiusRealEstate.com. Just want to talk to my investors who are investing in the Detroit area and some of the up and coming or emerging areas. Well, we call them emerging neighborhoods. So these are areas where there's really not a lot of activity going on as far as comparable sales. There's not a lot of owner-occupant home buyers buying in these areas. So what we're seeing is investors are calling in and saying, hey, I want to buy in this area because I see where the trend is going, or maybe there's a rumor of some new development coming into an area. Well, a lot of times these investors are using private funding or hard money lending, or they're going out and getting a traditional loan, maybe to buy and renovate a property. Well, here's the reality. Lenders don't care about where property is going to be in 2 to 3 years. They're worried about where the property is now, because they're loaning based on risk and they want to be able to get their money back in case of default. So although an area is emerging and it's the next hot thing, and maybe that's 1 year out, maybe that's 3 years out, the lender really doesn't care at this current moment. So it's probably either going to take you to raise some actual cash, and you be the first person to sacrifice and make that first property flip, and then from there it's going to start a trend and it's going to set a basis for market values. We've seen this happen in areas on the east side of Detroit. We're seeing it happen in Highland Park. It's happened in Hamtramck, where some of these areas there wasn't any home selling above $50,000 for 5 to 10 years. Then all of a sudden you see that one property for $90,000, then you see the one property for $150,000, and you're like, who's going to buy this home? And it sells within a week. And some of these homes are selling cash. So where's the buyer coming from? So pretty much you just want to make sure that if you're going to invest in this area, one, you either have the cash to buy and be able to hold it until the market turns, or you have a quick exit strategy and understand that you may be taking a small sacrifice, not a loss, but you may make a small profit, but that's just going to start the chain reaction to get the area going, right? So you start getting some momentum. So maybe you have to buy one property and flip it real quick, but you're holding on to 2 other properties that you bought for cheap. And again, the lenders, whether it's hard money, private lenders, or traditional lending, they're not going to see this vision, because we're seeing investors come in, they're buying in areas and they're saying, hey, Amazon is building over here, so I'm going to buy this $10,000 home and I'm going to put $40,000 into it, and the value is just not there right now at this time to support that investment, unless you're going to buy and hold it as a rental property. Or maybe you got $50,000 all in and you just sell it for $70,000 or maybe $75,000 and you make a small profit. But then the other 3 homes that you brought, now you have a basis to work from. So you're just going to take that and start the trend of the market going. Or you do what I see a lot of investors do. You let someone else with deeper pockets come in, they make the investment, and then they start the trend, and you just jump on the bandwagon and you come in right behind them and you start making those investments and fix and flip properties, or you buy and hold them long term. Me personally, buying and holding is always the best goal for real estate, because it gives you more assets and cash flow. I love cash flow. That's why I like doing land contracts versus just an outright fix and flip, even for capital gain purposes. Selling on installment payments has always been a better strategy for me. This is Reginald Perryman with RegiusRealEstate.com.